This is making money. So that big move yesterday, everyone's wondering, is it real? Is it Memorex? Well, JP Morgan, their trading desk said, hey, this is nothing more than an oversold tactical bounce. And I'll tell you this, okay, for the moment they're right, but you can see on the screen, maybe, just maybe yesterday could prove to be more than just, just a knee-jerk bounce, right? The question, of course, is the follow-through. And I got to tell you, first of all, JP Morgan, that same trading desk, said the same thing after the S&P rallied 474 points. That was last April 9th. You remember that. In fact, though, they weren't the only ones. Everyone on Wall Street kind of saw the danger of the market, right, because it was displaying spunk. Now, indeed, the biggest trading sessions in history have occurred around bear markets. That's true. Bear markets, though, happen when the economy is stumbling, when corporate earnings are in retreat, when valuations are coming down from seriously unsustainable levels. Wall Street was on the wrong side of the market all of 2025. They played catch up and really, I think, overly focused on old rules rather than future opportunities. And I think the moment the S&P 500 closes above, right here, above that 200-day moving average, we're going to see an amazing pendulum swing. There's going to be panic buying, and that can happen any moment now. Now, the ultimate spark in my mind, obviously, we know the conclusion of the Iran conflict. So it's time, obviously, for investors to start focusing on opportunity, right? Get ready if you're not already in there. Of course, the problem is that even before the conflict, this market was acting strange. Maybe it was the nonstop chatter, right? All we've heard about since 2023 is the AI bubble. And all of a sudden, we've had these pockets of technology stocks that got hammered. I mean, hammered big time. You know, you're in many of them, right? Software, for instance, getting crushed by AI. Then memory stocks got hit on news of an algorithm from Google. And photonics looked unstoppable. And then we heard maybe they're facing a future potential competition from a memory giant. And those stocks got hit. Here's the thing, though, folks. These companies are not fighting for scraps, right? They're all positioning and repositioning in what's going to be the greatest industrial revolution of all time, driven by artificial intelligence. And it is just getting started. I know there are concerns about financing, but entities with very deep pockets are forking over billions, tens and hundreds of billions of dollars to be part of this AI world. And if you have a moment, folks, just check today your stocks, the biggest beneficiaries of the AI revolution in the next 12 months. Look at these names here. See if you own them. I hope you do, and see how well they're doing just today alone. It is true that every company is looking out for their own self-interest. That's what business is all about. That's what capitalism is all about. And it does mean infringing on others' turf, right? We're going to see this in technology a lot. Some companies make memory chips, and some companies are trying to find ways to reduce the need for those memory chips. The market is treating this as if it's a bad thing, when in fact, it makes all these businesses stronger. And the best thing of all is that at the end, it serves us, the end user. So the street has overreacted to this technology food fight, which is actually creating delicious opportunities.